Welcome to this overview about the Youngevity Trading Academy and the One-Click Pro Trader. My name is James. I've been active in the program for some time. I am not an expert trader, and this is one of the reasons why I love this program so much. The 8-Minute Trader, which is one of the ways that we trade, and the One-Click Pro Trader, which is the system we use when we're not being guided by expert traders or master traders. These two components of the project are just amazing benefits to me. And I thought I'd share with you just what you learn and what you're given and the technology and the software and so forth that is behind the system. So we're going to look at the live alert trading. This is typically what you would do on your own. And this took me a little while to get used to in terms of, just being ready to take trades by myself, but I watched other people do that. And over the course of time, I grew in confidence. The other way that we trade, which I'm not going to cover here, because it's really done by experts. Every morning and sometimes other times of the day, we have a market open call or other calls at other times, and we'll be led by a trader. We'll watch over their shoulder as they place a trade, and if we like, we can take a trade with them. So I'm not going to be covering that here, but that's the way that I got started. And then by watching that and learning and realizing how simple this system is, I'm going to share you the simplicity of that now. I've been able to add both parts of that kind of trading to what I'm doing and really begin to enjoy it. So let's look at this. But before we do that, obviously there's a disclaimer. Trading is risky. Your results will vary. You will lose, you will win, but your results will vary, and they're not guaranteed. This information is for educational purposes only. It is not a solicitation to invest or provide financial advice. I'm not a financial advisor. Remember that each trade is at the discretion of the user, that's you, and users, that's you, are fully responsible for the outcome of your trading results. One should evaluate their own risk tolerance, I'll talk about that in a second, before trading, and only trade with money that they can afford to lose. So let's talk about taking some alerts. And again, in the context, remember we have two ways that we trade primarily. One is that we join traders live, watch what they're doing, and we can decide to take or not take trades that they are taking. This part of it now is when we are just on our own, and we are enjoying the software and the trading alerts. And let's break that down so that you understand what that means. So we're going to be taking a trade. This starts when we get an alert. Now we'll pull up our MT4, our charts, and we'll plug into the software. We will know what our trading plan is. We'll set some parameters. And once we've done that, once we've got our system set up, then we can start to follow these, what we call alerts or pop-up alerts. So we don't just click yes or no. I'll show you that that's the way we take a trade, yes or no. That's why it's called the one click. We'll get onto that in a second. But we do check the time of day, and super important, we check the trend. And if it's a good time of day where there's good trading volume, for example, and if there's a trend, so if we're taking a signal that says buy, and the overall trend is also buy, that's a safe trade. If the overall trend is a buy and the signal says take a sell, that is in all likelihood a more dangerous trade, but it may be a good short-term opportunity to take some quick money, what we call scalping. So you have to take those decisions. A lot of us just will not take a pop-up alert. If we get an alert that says buy, we'll normally only take that if the trend is also a buy, and we'll normally only take it during a good time of the day to take those trades. So we have these checklists, which for me is really wonderful. It takes the pressure off. I know I can check and okay, this signal's consistent with the trend. It's in a time when I should be trading, where there is volume, and so it's not a higher risk trade when there's no volume. And so then I can take the trade and follow my trading plan. So when we get that, this is what an alert will look like. And actually, just as I'm recording this in early August, the software has been upgraded. So these are going to be colored a little bit differently. Actually, these 4 different options will be color coded differently, which makes it even more easy, even more vivid for what you'll be doing. But we typically have, we get an alert, and we'll see maybe the alert comes in here. And this is kind of the sweet spot in here. And the alert's a little bit high, but the trend is still going up. So you might want to get in. We frequently do that. But of course, it's better if you can get in where the alert was coded as being the best. So you have the option of taking the current price. That would be the trade 1 in this scenario. It's not always like this. This is just one example. You got trade number 1. You could take that trade, and sometimes we have the market will, as you see, up, down, up, down. Oftentimes it will come back down, and when you can catch a second trade at that time, or maybe you only take a trade, then you will have more advantages. So you can take 1, 2, 3, or 4, or you can take 1 and 4, or 2 and 4. You can take whatever options here that you want, and this will actually set up your trades and put what's called a stop loss in. But this is a buy signal, so you'll see this on your chart, and I'll show you what this looks like in on an actual chart in just 1 second. But this is the indication there's a buy signal, and I'm going to assume there's a buy trend. In other words, I'll show you that. It shows up in the corner up here. But I like to take a couple of different entries. So I would typically take 2. Everybody has different styles. A lot of people only take 1. I like to take split up by risk and take smaller trades, more trades, and have the option. But sometimes, I'm not going to get into all the details of that, but that's my preference. And there's a couple of different styles. You get trained on all those options. Anyway, you can take the current trade, or you can, another strategy would be take trade number 2, where you wouldn't take an immediate trade, and only if the market drops back down here, you'd have a price locked in and a trade locked in at a recommended area, or you could do it down at trade number 4, and this gives you a lot of great options. So I hope that didn't confuse you. It'll make sense to you in just a second as we look at more of these different ways that you can benefit from the software. So we also look at the time of the day. I mentioned that. So 1 is the trend, and we'll show you a chart about that in just a second. But there's different times of the day. We in our group trading, we often use, well, we were using M1. Now we're using a lot more of M5 or M15. And if you don't know what that means, it just means minutes. So when we've been trading on the US 30 or the NAS, we've often been on a 1-minute time frame at the market open. Other times of the day, we don't use that so much. We use M1 or N5 or even M30, 30-minute increments, 15-minute increments, or 5-minute increments to see and catch the market trend. But anyway, during these time periods, different of these have good trading volume. And so this is just a generic chart. We have also recently added the Nikkei, the Japanese index for Asian trade timing. And some people do the London or the Frankfurt exchange as well. So there's a lot of different options. The software will cover all these. We also down here, the one I love, we can trade gold. And there's also the option to do cryptocurrency, Bitcoin or Ethereum typically. But anyway, this is one of the other things in the chart. You always have this in front of you. So this is part of your checklist to know that you're taking the time, a trade in one of the proper times. And this is what I was mentioning about the trend. So let's see if this is a sell signal that you had come into your system a little bit earlier. And this was an indication that you would want to sell. And then what's happened since that came in. And notice that in your software, we'll always tell you the current trend. This is so important to know without evaluating a whole bunch of charts. Of course, You can look at a bigger time frame. You might want to, and most of us do, at least check back on the longer time frames to see what the overall trends are. But this is so convenient, and so it saves me at least, and I know a lot of other people, a lot of time and risk by just taking trades in the trend. Because I don't like to, I know other people do, but I don't take trades that are against the trend. They're just more risky, and I prefer not to do that. That's my more conservative style, but this equips me to follow that more conservative style. Anyway, when you get this signal and you see it's consistent with a sell trend, and you get the signal and it's coming in here, then you would know you could lock in a trade, and this trade would go not up, in a buy direction, but down in a sell direction. So you'd have, option, your trade number one, option 2, 3, and 4, something like that. And you could choose one of those. And then you could watch that as the market, if it followed this trend where the market was going, you could do that. Now, and then there's different things. So when the status says buy, you look for, and we have different color coded buy signals. This is a blue sell. So that's a blue sell. It's kind of an intermediate, and I'm not going to get into the details of this, but we have the status is a sell here. So we have a couple, we know kind of how strong the sell is in different colors, red, blue, or yellow. We also have a range. So this trend may be buy or sell, or it may not be identifiable, in which case it'll tell you it's in a range. And again, you don't have a trend, and so if you took a signal when you don't have a trend, you're in a little bit more risky territory, right? So again, I hope that didn't confuse you, but it's just to give you, once you do get a little bit educated, as I am now, you would find these are really equip you to make really much better decisions, and your results will improve quite dramatically. So when you want to take the trade, we've got these 1, 2, 3, and 4. We showed that earlier. In this example, this person would be taking 3 of the 4 options: trade entry 1, trade entry 3, and trade entry 4. And you can check that or not. And then you can also say yes or no. So you may look at this. This has happened to me. I've looked at the trade, and it looks interesting. And then I look at the trend, and the trade is not consistent with the trend, or the time of day is not good, and I'll actually click no and just tell it to go away. But this, again, not to confuse you, but you will have a setting that you'll put into your version of the software, and these 4 trades, which it gives you as options, those are combined to have your total risk setting. You will set a primary risk percentage. So let's just, to make the example simple, you might have it set at 1%. I usually have mine at a lower percentage, but let's say 1%. Mine's typically 0.5%. But then if you have it at 1%, it would split these up. So if you took all 4, you'd have 1% divided by 4. That'd be 1/4% if you took all 4. If you have 1% and you take 3, divide by 3, and that's 0.33% for each of these entries that you take. And my typical one, I take 2 trades typically in this kind of scenario, and with 0.5%, each one of those would be 0.25, right? Half a percent is 1/4%. So I typically take 1/4%, but the system, the beautiful thing about it, you don't have to figure this out. There's no math for you. The system automatically divides your preset primary risk percentage by the number of trades that you're going to take. And, in my case, when I typically will take 2 trades, then I always know, well, my primary risk is 0.5%. I'm going to put 1/4% on this one and this one, or this one and this one, whatever the case may be. And I know what I'm doing then. I've thought about it. I've checked the trends, checked the time of day. Now I know my risk allocation, and I click yes, and we're off to the races. So if you want to take the trade, as we said, you realize that that's your total percentage, and then you're able to execute that trade. So this also has another amazing function, which is your automatic lot size, which lot size just means the amount that you're putting into the trade. So you don't put all your trade in. You determine, and this is in your account information, you set this up beforehand, your primary risk per alert, and we also have a mitigation risk, not to get into that, but basically once you have that, you can get your primary risk, and your lot sizes for each trade will be automatically calculated for the number of trades. So if it's you got 0.5 here, you can see this has done the math, and your lot size, depending on your trading amount, is divided up all these different options. So again, I'm not going to get into that. This is a little bit more complicated version of what I was talking about, where you have mitigation trades, which are help you to catch a trade at a better position. But do you get the point that it's done all automatically? Okay. So once you've done that, you know what your amount is. So it gave you an indication from here as to how much your amount should be. You put that into this, and when you place the trades, and you're off to the races. So again, in this example, this person has set the settings down here. This is a buy signal down here, and they had a buy trend, as you can see. And when they got this signal, they chose a couple of trades. They had their lot size calculator. They put that in, and they pushed pressed yes, and they're into a buy, implementing all the information that they have here. So you just copy your lot size, you put it into this little box, and click yes, and you're off to the races. That's how easy that really is. And so then it also automatically sets things up, and this is, for me, just so important. You're given, so this is a blue line, and if you are executing a trade, it tells you where to put your stop loss. And again, if you're not educated on this, join the club. I knew a little bit about stop losses before I joined the academy, because I had done some crypto trading and some Forex trading, off and on since about 2017. Not at all an experienced trader. I usually had done things in different ways, but this is so wonderful because it tells you exactly where to put your stop loss. You don't have to figure that out yourself. And so when this buy signal came in, presumably you had a buy trend, and you would execute that. Let's say you took 1, 2, and 1, 3, and 4, like the example was, or my typical example, 1 and 4 or 1 and 3. I executed that, and then I know that the software is going to put in my stop loss right down here at the blue line. And if you do trades manually, you don't have to use necessarily the one-click trader. You can actually do these yourself. But if you follow this as a signal and then execute your own trade, you know where to put your stop loss. So the system is identifying this. It makes it so much easier, so much less stressful, and far more accurate for someone who's not a master trader like myself and perhaps yourself. Then you follow your own plan. So the starting point before you get going is to put together a trading plan. We have videos, we have systems that will guide you to do that. But basically, you also set up your trade according to your trading plan, and then you manage and execute your trade according to your trading plan. Follow your trading plan. But once you take that, you just manage your trades from there. You have the rules that you set up in your trading plan. And so, when a trade starts to go up, do you move your stop loss or do you keep it there? When do you move it? Do you move it at a certain level? And also, when do you take your profits? And I'm still at a point where I'm trading pretty conservatively. We'll have an example here in just a second, but this is really important to follow your plan. So this is risk and reward. So if you get an entry here, if it went down, your stop loss, you determine how much your stop is. Basically, it tells you how much risk. So your plan will tell you, number one, when do I move my stop loss to break even? So in this scenario where it's gone up and it's gone up pretty quickly, and you got 2R, which means basically you're in profit to get double of what you risked, you would want to no longer have this fallback position in a lot of cases to cover you in case the market also crashed, because the market doesn't always just simply go up. In fact, you can see it's constantly doing up, down, up, down, up, down. But even in a move like this, you might see an equal move that will go down here, or maybe it will go down here, or to go down here, and then go back up. In fact, that's quite common, that it goes up and then retraces and goes back up and then retraces and goes further up and retraces and goes further up. And you've got to have the settings. And so your management of your trade is absolutely critical. And then you also want to know when to take your profit. So taking multiple trades, like I said, I usually take 2. You can, using the system, you can take more than that, as many as 4 using the automation, and you can add more if you want. But you might have it set up to where if you get 2R, you want to take your profit. And then you have another trade that runs longer with a higher risk scenario. And so you would take half of your risk and you'd take the profit when it reached this one. And your second one would take a higher risk, but also a higher reward, a 4R, when it reached here. And I use, my settings are still pretty conservative. I tend to do either 1.5 or 2, depending on the size. In here for my first trade, and then my second trade, I like to go to a max of about 5R. And we got a database that gives us stats on this, but and then you can close anywhere in between. But this really gives you a lot of options, and it just tells you when to trade. And one of the key things is, if you get in a win scenario, then you can move this stop loss to break even, so that if it does come back, you'll break even and you'll have 0 loss, because it will stop your trade. And of course, if it's gone higher, you can do what's called a trailing loss. And I love the trailing losses when we start to get a bigger win, because I'll move this item, this stop loss, maybe up to, if we start trading in here, I might move it to 1 or 2 or somewhere in here, follow a trend line, and leave it there. And then that means even if we get a sudden drop back here, it's going to still give me a win at whatever level I brought this stop loss up to. So that's another super cool feature of this. Something I had heard about, trailing losses. I had no idea what they were talking about, and now I can simply execute that, and you can too. So this just enables you to follow your plan. And again, my plan basically is at basically about 2R, I like to take a first profit, and basically at about 5R, I take a second one. And depending on what's happening, I watch it and manage it. I can take the profit, and I can adjust my stop loss in the middle, but I have an automated, so when I don't get too greedy, that's the other thing. Oh yeah, let me talk about the greed. So when it starts to get like this, you're often going to think, well, I'll just hold, I'll hold, and you don't take out your profit. And when, that there's advantages both ways. I'm not going to get into detailed trading strategy, but greed kind of sets in from time to time. So this is one reason why, and we sometimes get 5, 6, 7. The statistics, the more profit there is in a trade, the lower the percentages that you can actually get there, because your typical trades are in the range of between 1 and 5. And our traders in our system has roughly about 70% win rate, which means 3 times out of 10 you have a losing trade and you want to stop your loss here. And so for the 7 remaining times, you want to win, and you want to win at least 1R to make up for your 3 little losses. And so you want to recoup. This is why I take a lot of wins at this level. And then when I see a trade that goes more, then those 1 or 2 or 3 trades out of 10, I can pick up more and gain more profit. So that's one strategy. That's kind of mine. I'm just sharing that as an example. But this all gets automated once you put this into your into the software for your own customized settings and you follow it. So I think that's really it in terms of becoming a successful trader. It's not about trading your account. And this is why I've stressed your trading plan. I shared a little bit about my trading plan. You trade your plan. And if your plan is good, then you'll be profitable. You have to control yourself. You can't get depressed and not trade. You can't get greedy and trade too much. You just trade your plan. So you do whatever is your plan for that time, and then you're good. So I hope that has helped you, and thank you for watching today. There's the information below this video on how to get going, and we'd be glad to help you along the way, get you started with the Youngevity Trading Academy, and plug you into our live calls and our live alert trading and our trading psychology with our masters, including Dr. Luis Ariaza. So excited about this, and trust that this video has been helpful for you in understanding how this all works. Thanks a lot. Bye-bye.